Hi guys, thanks for tuning in to another episode of Nuggets News. Well, in this special presentation, I want to give you a guide to investing in precious metals. It's a question that we get asked a lot, and there's a range of precious metals out there, but today I'm going to focus on gold and silver, the two that have traditionally been viewed as monetary metals throughout history. Now, gold's at an interesting juncture. This is a monthly chart going back to the year 2000. It's had quite a run up from $200 or $300, nearly touching 2000, and then pulling back. And I'm going to talk about all the factors that influences gold's price and whether or not we might be on the cusp of a new breakout and bull market. Now, one of the main drivers is interest rates, and as we see here, going all the way back to the 70s, interest rates were rising quite a lot for a range of reasons, but since then it's pretty much been all downhill until we got to that zero boundary. In other countries around the world, interest rates have actually gone negative. I'm going to talk about that towards the end as well. Now, central bank actions were meant to be short-term and accommodative since the GFC, and we see the US Federal Reserve starting to raise interest rates, but a lot of people are now thinking that, hey, they might not be able to raise interest rates too much more before we head back down again. That's got a lot of people interested in gold. Now, when we talk about gold, we often quote the US price, but in other countries around the world, a lot of fiat currencies have weakened comparatively to gold. So here's an Aussie dollar chart, again a monthly chart of gold priced in Australian dollars, and here we see it's already broken out to new highs, getting over that $1,900 mark again recently. Now, in other countries like Venezuela that have undergone hyperinflation, their currency is basically worthless, gold's breaking out to tremendous new highs. So it all depends on the strength of your currency, but we often see that gold price, silver price quoted in US dollars. So just something to be mindful of. Now, one of the main driving factors, as I said before, is interest rates, but a lot of people don't realize the difference between interest rates and real interest rates. So the best way to describe this is if you have a savings account in a bank and you can get 5% as your interest rate, that's not much good to you if inflation is tracking at 7%. So if everything's going up at a faster pace, then your real interest rate is negative. By having money in that 5% savings account, you're actually losing value because inflation is 7%. So here we see a chart, again, going back to the 70s, of real interest rates. And as we can see here, the United States in the past few years has been pretty low. Real interest rates are around 1.5%, whereas in Australia, real interest rates have been up as high as over 6%. And that's why you see gold, one of those driving reasons why gold has performed so well in Aussie dollars, as well as a range of other factors. Our economy is weakening. So